Across the nation, we're starting to see a shift in the real estate market. What about Omaha, Nebraska? Are we starting to see a shift in the Omaha real estate market? Where is the inventory in the Omaha market as we enter the summer selling season? What about home prices? Are we starting to see a correction in the Omaha real estate market? Those are the questions we're going to answer in today's video, and we're going to get started right now. For the numbers we're looking at today, we're looking at Douglas and Sarpy County. Now, just as a reminder, Douglas and Sarpy County are the two most populated counties in the state of Nebraska. The state of Nebraska has a total population of just over 2 million people, and almost 40% of the population in the state is located in these two counties. Douglas County is the home to the city of Omaha, the towns of Ralston, Bennington, Waterloo, and Valley, Nebraska. Sarpy County is located directly south of Douglas County and is home to the cities of Bellevue, Papillion, La Vista, Gretna, and Springfield, Nebraska. Let's take a look at the current inventory in Douglas and Sarpy County. Currently, we have 2,049 homes on the active market. That is up 8.3% compared to 2024. One of the things you've heard over the past several years is the lack of inventory. More inventory is good, especially for buyers. I can tell there is more inventory because what you're starting to see when you drive around Omaha is you're starting to see more directional arrows. These are the signs at the end of the street pointing to where a home is listed for sale. In the past several years, homes were selling so quickly that many agents did not even bother to install directional arrows. When you start to see more directional arrows, it indicates the market is slowing down. Does that mean we're in a buyer's market? No. What you're starting to see is a more balanced market, and that's good. The pandemic market, where we had a total of 350 total listings and every home had 15 offers, was an unhealthy and unsustainable seller's market. As we enter into a more balanced market, if you're a seller, it means a couple of key things. Number one, you have to be priced right. If your home is overpriced, it's going to sit. Two, when you have a balanced market, 9 times out of 10, that buyer is going to be doing a home inspection. That means buyers will probably be asking for repairs. 3, in a balanced market, you're going to see buyers asking for closing costs. 4, in a balanced market, your home may not be selling for full list price. Some buyers will ask for either seller concessions or a little bit off the list price. So as a seller, you're going to need to adjust your expectations. If you're a seller, you need to go back to school. You need to go back and do the things necessary to make your home stand out from the competition. Now, what can you do to facilitate this? Number one, you can have your home pre-inspected, then make the necessary repairs. I'm a big believer in a pre-listing inspection. It's great to reduce reliability, and it gives you more time to make the required repairs. 2, you need to spend time to properly prepare your home for the market, and this means professional staging. 3, you have to put your home in the best possible light. Have the home professionally cleaned before putting it on the market. Number 4, you want to be proactive. Have the furnace and AC cleaned and serviced before putting your home on the market. Number 5, you might want to consider offering the buyer a home warranty. Home warranties have not been very popular in the past few years. I think you'll see them more of a comeback in the current market. Finally, you need to work on the home's curb appeal. A little bit of work can go a long way. Maybe you need to trim up some bushes or edge the yard, or maybe add some fresh mulch to the flower bed. Sellers who do those items and who price correctly can still get multiple offers. But in this market, it's nothing like the pandemic market. If you're a buyer, does that mean you're going to get a great deal? No. Homes still sell for market value. With all of the uncertainty, many buyers have taken to the sidelines. Now, should you wait to buy a home? Are prices going to go down? And here's the thing, nobody knows. Here's the deal. If you're a buyer, you still have to have a long-term outlook. Do not buy a home and think you're going to be able to sell it 2 years later for a profit. In fact, you might have to own it for several years just to break even. You have to understand the importance of having money saved back in reserve. When you buy a home, you have to have money set aside for repairs. Nobody will tell you this, but you need to have money saved up in reserve just in case you have to sell on short notice. Not all sellers make money. Some sellers have to write a check at closing in order to sell their home. I believe in home ownership, but not everybody should buy a home. Sometimes it is better to rent. You have to buy a home with the expectation that taxes and insurance will be going up. It's not if insurance will be going up, it will be going up, and it'll be going up a lot. Guess what? It goes up for everyone. If you own a home, your insurance is going to go up. If you rent, guess what? Your landlord's insurance is going to go up too. And that means if you rent, your rent will be going up right along with it. Now let's jump back into the data. Let's look at the inventory over the past 10 years. Now, in May of 2025, we have 2,049 homes on the active market. Let's compare the current inventory to the inventory pre-pandemic. In May of 2019, we had 1,706 homes on the active market. In May of 2018, we had 1,672 homes on the active market. In May of 2017, we had 1,738 homes on the active market. In May of 2016, we had 1,915 homes on the active market. We've not had this many homes on the active market since May of 2015, when we had 2,403 homes on the active market. It has been 10 years since we've had this many homes on the active market. Now let's look at home prices. The median closed sales price for May in Douglas and Sarpy County was down 1.4% compared to May of 2024. The median closed sales price was $330,000. Does this mean prices are headed down? Not necessarily. What I feel you're starting to see is that prices are starting to level off. And you know what? That's good. If that continues, that means over time, as wages increase, it means more buyers will be able to afford homes, which will mean an increase in sales. If interest rates go down, that will give buyers more buying power. What will rates do? Nobody knows. Should you wait for rates to come down? Nothing says that rates have to come down. Don't buy a house with the assumption that rates will be coming back down. There's a saying out there, marry the house and date the rate. Well, there's no guarantee that rates will ever come back down. You got to be comfortable with the rate you currently have when you purchase the home. Let's look at the median closed sales price in Douglas and Sarpy County over the past 5 years. If we look at the monthly median closed sales price, it is a very jagged line. However, we still see prices up from 2020. But you're starting to see prices beginning to level off. If we take the same time period, but this time look at the 12-month rolling average, we still see prices increase. But you could also see that beginning of November of 2024, prices started to level off. Could prices come down? Absolutely. Nobody can predict the future. Every market is local. Understand, I'm not trying to convince you to buy a home. If you don't want to buy a home, don't buy. In fact, if you're not ready to buy, or if it's not the right time for you, then I think you should rent. Don't feel bad about it or think that you're throwing your money away by renting. One of the things many people don't understand is how a 30-year mortgage is paid off over time. A 30-year loan is amortized, meaning it is paid off over time in equal monthly payments. Each payment consists of both principal and interest. When you take out a loan, at the beginning of a loan, most of your payment goes towards interest, and only a small portion goes towards reducing the principal, the amount you borrowed. As time goes on, the amount of interest gets smaller and more goes towards principal. This happens because interest is calculated on the remaining balance, and as the balance gets lower, you pay less interest. By the end of 30 years, most of your payment is going towards principal and the loan is fully paid off. Let's take a loan of $300,000 at a 7% interest rate. Now, your monthly principal and interest payment for a 30-year loan is $1,995.91. Now, over the life of the loan, you'll pay a total of $418,526.69 in interest, more than the original loan amount. Most of the interest is paid in the early years. For example, in the first year, $20,903.46 is paid to interest, and only $3,047.43 is paid toward principal. That very same loan, in year 10, $18,239.47 is paid toward interest, and $5,711.42 is paid toward principal. Then in year 20, $12,472.87 is paid toward interest, and $11,478.02 is paid toward principal. Finally, in year 30 of the loan, $883.95 is paid toward interest, and $23,066.94 is paid toward principal. If you sell in the early years, it means you have very little equity built up. Most of your payment went toward interest. Another reason why you need to have a long-term time frame when you buy a home. Now let's talk about closed sales. We have had inventory increasing, yet the number of closed sales is decreasing. Fewer people are buying homes. Last month, we had 990 closed sales for the month of May in Douglas and Sarpy County. This is down 12% from 2024. Why is this? I believe what you're seeing is a result of the uncertainty in the marketplace. Closed sales in May are a result of homes going under contract in April. President Trump declared April 2nd as Liberation Day and announced sweeping set of tariffs aimed at reducing the U.S. trade imbalance. Now, what did that do? It injected a whole bunch of uncertainty into the marketplace. When there is uncertainty, people have a tendency to pull back. I think fewer buyers were willing to make a significant purchase, like a home, when we have this level of uncertainty. Let's look at the number of closed sales over the past 5 years. In May of 2025, we closed 990 homes in Douglas and Sarpy County. In May of 2024, we closed 1,125 homes. In May of 2023, we closed 1,036 homes. In May of 2022, we closed 1,193 homes. In May of 2021, we closed 1,288 homes. In May of 2020, we closed 1,135 homes. And that was during the lockdown period during the early pandemic. If you go back and look at closed sales over the past 22 years, there were only 3 years where we had fewer homes sold in May of 2025. In May of 2011, we closed 819 homes. In May of 2009, we closed 903 homes. And in May of 2008, we closed 908 homes. Those were the years of the Great Recession. Trust me, I was selling real estate back then, and there was plenty of uncertainty in the market back then. However, there will always be a real estate market because life is not going to stop happening. Because, and you've heard me say this before, when someone gets married, has a baby, gets divorced, or passes away, it creates a real estate transaction. Let's take the same time period and look at the median closed sales price. Even during the Great Recession, we did not see prices tank. Prices stayed relatively flat. What do you think prices will do? Do you think prices will go up, go down, or remain flat? I'd be interested in your thoughts and leave them in the comment section below. Also, if you like this kind of content, please do me a favor and hit the subscribe button. And if you're getting value, please go ahead and hit that thumbs up. I'd really appreciate it. Let's take a look at the months of supply. We currently have 2.3 months of inventory on the market. That means if no other homes come on the market, it would take 2.3 months to exhaust the current inventory. As a reminder, 0 to 3 months of inventory is a seller's market, 3 to 6 months of inventory is a balanced market, and 6 months or more of inventory is a buyer's market. However, the market is not equal across all price ranges. Different price points behave differently. We see that in the Omaha market. If you're above the $400,000 price point, it is a much slower market. Above that price point, there are fewer showings and a lot more competition. Here are the months of supply for 450 and above. If you're in the 450 and above, there are 4.5 months of inventory versus 2.3 months of inventory across all price ranges. What about the price per square foot? We're going to separate new construction from existing, and we're going to be looking at a 12-month rolling average, and we're going to look at a 5-year time frame. The median price per square foot over a 12-month rolling average for new construction was $257 a square foot. For existing homes, the median price per square foot was $213 a square foot. Let's talk interest rates. According to Mortgage News Daily, the 30-year fixed-rate mortgage is currently just shy of 7% at 6.97%. Everyone would like to see rates drop. There is political pressure for rates to drop. Nobody knows what rates will do. Hopefully, we'll see rates come down, but there's no guarantee. Let's look at the inflation rate. Inflation is looking better. As of April of 2025, the current inflation rate is 2.3%. This is good, but it could be a sign of an economy beginning to cool off. Time will tell. Speaking of cooling economies, let's take a look at GDP. The first quarter of 2025, we had a negative 0.2% drop in GDP. This is the first negative GDP since the second quarter of 2020. The textbook definition of a recession is 2 consecutive quarters of negative GDP growth. We could be in a recession right now. We won't know until the numbers for the second quarter are posted. With the amount of uncertainty and how sales have cooled, it wouldn't surprise me if we were currently in a recession. Again, a recession may not mean an automatic drop in home prices. If we do see a recession, that may not be a bad thing if you're a home buyer, because many times the Fed, in order to stimulate the economy, will lower the federal funds rate. However, there are a lot of moving parts and there's no guarantee. Let's take a look at the unemployment rate. The unemployment rate for the United States is currently at 3.9% compared to 3.5% in 2024. Locally, in Douglas County, we are at 3.2% unemployment rate for April of 2025, which is up slightly from 3% in 2024. In Sarpy County, we have a 2.8% unemployment rate for April of 2025, which is up slightly from 2.4% in 2024.